signal-to-noise ratio, a measure used in science and engineering that compares the level of desired signal to the level of background noise. I bring it up because today the noise seems deafening, often obscuring the important signals we need to make intelligent and thoughtful decisions. In the last few weeks, think of what we've been forced to deal with. On June 27th, the presidential debate sparked concerns about the president's health, prompting many in his own party to suggest he shouldn't run for a second term. 2 weeks later, there's an assassination attempt on former President Trump, and just a few days ago, Biden drops out of the race, handing the baton to his VP Harris. I'm not done. Now throw in a massive asset class shift from large cap to small that has wiped out over $2 trillion from the S&P 500. The stocks hit hardest, large cap secular growth, AI hyperscalers that make up the bulk of this market. So it's not surprising investors would grab onto any stock still floating. What's working, what isn't, and what's next? Welcome to The Money Runner. I'm David Nelson. Needless to say, portfolio managers, wealth advisors, and investors have a lot on their plate. The rotation out of large into small cap shares began a couple of weeks ago, it's culminating in Wednesday's sell-off, the worst since 2022. So what was the trigger? Most point to Alphabet, the first of the Magnificent Seven, to report. While it may have lit the fuse, I believe the real damage to the tech trade came from another sector. Vertiv, symbol VRT, a small industrial stock that provides power transfer switches, monitoring equipment, and most important, cooling solutions for data centers, took a hit. This is a story about the rate of change of the rate of change, or what is commonly referred to as the second derivative. Most analysts came away from the report believing the bull thesis intact. JP Morgan's Stephen Tusa points to a backlog of 50% year on year. However, he does discuss timing as some orders slip from one quarter to the next. Traders smell blood and slam the stock for better than a 13% fall. This company's definitely on my watch list. I've traded it poorly in the past, but this time I know how to handle the volatility and will size it accordingly. The tech sell-off highlights the mismatch in timing. We are spending billions to build out AI infrastructure, but we aren't yet seeing the top and bottom line acceleration in firms that adopt the technology. Alphabet's numbers were solid, with search up 14% year on year and cloud up 29%. There was some softness in ad revenue from YouTube, but I think the real concern was the level of spending on artificial intelligence. The CapEx spend climbed to $13.2 billion, a full $1 billion more than the street was looking for. Alphabet's a money machine, and few portfolio managers don't own it. However, two lurking concerns haunt this stock. Is CapEx growth to build out AI going to outpace earnings growth? And if it is, for how long? The future of search. While this quarter's search numbers were impressive, it is becoming clear they are no longer going to own it. With OpenAI and others developing robust tools and new ways to query data, by definition, they will have to give up some market share. Thursday's trading was classic, as investors tried to find their footing following Wednesday's drubbing. The good news was some panic and capitulation followed, setting the stage for at least a pause in the decline. Traders love trend lines, and on Thursday, that's where some buyers stepped in. Many stocks, including NVIDIA, down more than 6%, did sharp reversals, even going positive for part of the day. Friday's PCE inflation data was relatively benign, coming in close to expectations, and now all eyes turn to the Fed meeting on Wednesday. If there's any hope of a September cut, we're going to need to see something in the July statement that suggests it's a real possibility. Most economists believe that a good CPI report in August will seal the deal. This will be a pivotal week for markets, with 4 of the Mag 7 reporting. Microsoft reports Tuesday, Meta on Wednesday, while Apple and Amazon close out the week Thursday evening. To halt the slide, we're going to need to see something more than inline or modest beats. We need to see management meaningfully raise guidance and a timeline as to when the heavy CapEx spend will start to pay off. Anything less will continue to feed the rotation narrative. We held the trend line on Wednesday, but make no mistake, we will retest those levels and likely sometime soon. It may be summer, but for investors, the vacation is over. We're all going to have to work for a living navigating what will be a more challenging year, especially as we get closer to the election. Already, Mag 7 shares have fallen to levels where the valuation premium to small caps has all but been wiped out. Remember what I posted a few weeks ago. When the Fed starts cutting, there's a high probability that a recession will follow. At that point, these stocks, with fortress-like balance sheets and little need for banks and credit to fund their working capital and growth, will once again become the safe haven trade. Well, that's it. If you like the pod, do us both a favor. Please hit subscribe. And don't forget to check out my Substack site, dcnelson123@substack.com. Thanks for joining. I'm David Nelson, and this is The Money Runner.